Hello family, if you're watching this video, I don't have to tell you that the housing market has gotten unaffordable for a lot of Americans. In fact, housing affordability is eroding, going away, at the fastest levels since 2004. Despite what people were saying back in 2020 and 2021, the data shows that even though home prices were rising during those years, housing was actually very affordable. But things have changed in the last few months. Interest rates have shot up almost 200 basis points, and that has only happened one other time in our history. Still, the typical home that sold in January 2022 remained much more affordable than homes during the run-up of the housing crash back in 2007. You see, today, salaries are much higher than they were during that housing bubble, but mortgage rates also remain significantly lower than they were in 2006, even after the recent climb in the past months. In a report released on April 20th, 2022, U.S. home prices reached record levels, $375,000 in March, and that's with the increased interest rates. Existing home sales fell 2.7% in March from the prior month to a seasonally adjusted rate of 5.77 million, according to the National Association of Realtors. And March home sales fell. They went down 4.5% from a year ago. And family, if you've been watching this channel, you know I've been saying this. Even when I've been doing my own Lil Wayne impersonation, as far as jumping on everybody else's channel, I've been saying the same thing. Housing prices will continue to rise. It's a simple supply and demand dynamic at play here. Because even though home prices are skyrocketing and affordability is becoming, and not just becoming, it is a major issue, demand is still outpacing supply. And I believe it will continue to do so until at least the first quarter of 2023. So no, I don't see a housing crash. What will happen is there will be a significant slowdown in the number of transactions. So there won't be as many homes being sold because there will be significantly less inventory. But home prices will continue to go up because demand will still outpace supply. One thing many people are overlooking is the fact that 3/4 of homeowners refinanced their mortgage in the past 2 to 3 years. And for all those people who refinance and have a 2, 3, or 4 in front of their mortgage interest rate, they're not incentivized to sell their home. Why would they? Why would they sell their home with an extremely low interest rate to buy a home that will cost more due to the increasing home prices? And it will cost more in terms of financing because the interest rates today are much higher than they were even a year ago. You see, a year ago, mortgage interest rates were at 3.04%. And today, April 20th, 2022, interest rates are at 5.27% on a national average. And that is a huge jump. That's over a 2% jump in just a year. So that dynamic will keep supply low for at least 2 years, in my opinion. Yes, some people will have to sell. Their job may get relocated. There will still be death and divorce. So you will have natural occurrences where people have to sell. But to the people that are on the fence of selling and they may want to move up, get a larger home, or to those people that retired and may want to downsize, those people will be hesitant to sell their home because once they do the numbers, they'll decide that it's just not wise to sell. Why would they sell and have to pay more for less? And that decision of them not selling will keep inventory extremely low. Real quick, if you're getting any value out of this information, do me a huge favor. It helps my channel out and allows YouTube to know that people are gaining value from this information I'm providing. So please leave a comment and hit that like button. I greatly appreciate it. Thank you. And builders can't build fast enough. Yes, building permits for new homes are at all-time highs, and that's a topic for a future video. So be sure to subscribe to the channel for future updates about real estate, finance, and money. Now, the hard truth is that household incomes today are nearly 48% greater than they were in April 2006. And the average mortgage rate in April 2006 was 6.15% for a 30-year fixed rate. Now, if you compare that to today's rate at 5.27% for that same 30-year fixed mortgage, you will see that it costs less in terms of financing to get a loan today. But that does not negate the fact that housing affordability is eroding at the fastest rate since 2004. And that is very alarming and something that we should all be concerned with. Quick aside, since we're comparing today to the early 2000s, I want your opinion on this. I had some conversations with some friends recently, and let me just give it to you. I believe that today's music is absolutely garbage, relatively speaking, when you compare it to music in the early 2000s. I personally like the music from the early 2000s than present day. Let me know in the comment section whether you agree with me or if you think I'm just off in my opinion. Now back to the topic of this video. Presently, the typical home costs the typical consumer roughly 2/3 as much as it did during the housing boom in the early 2000s. So that 2/3 is still quite a big buffer for the average buyer, but that buffer is eroding away very fast. The decline in affordability for housing over the past year represents the largest drop in any 12-month span since 2004. In March 2022, sale prices were 56% higher than they were during the housing boom at its peak in 2006. But after considering wage growth, yes, people are making more money, and mortgage rates being lower, in terms of the actual cost and percentage of income, house prices today is actually about 20% lower than they were in 2006. So while home ownership remains relatively attainable for many buyers, as evidenced in the demand outpacing supply and prices continuing to go up, I expect affordability to continue to trend downwards in the foreseeable future. One economist put it like this: in the near term, affordability is likely to wane further nationally as rising mortgage rates and increasing house prices continue to outpace gains in household income. So, we're not making enough fast enough to compete with the rising prices and the rising interest rates. Another quick aside: if you want a huge bump in your pay, yes, you can go to your boss and ask for a raise, but you will get a significantly higher raise if you changed companies. That's just a quick tip. Lawrence Yun, the chief economist for the National Association of Realtors, said this: housing affordability continues to be a major challenge as buyers are getting a double whammy: rising mortgage rates and sustained price increases. Some who had previously been qualified at a 3% mortgage rate find themselves not being able to get qualified at 4% and definitely not able to get qualified for a home at 5.27%. Now, this may be news to you because I was a little shocked by this. The median income in the United States was just over $44,000. And with that income, assuming you have zero debts. Now, I'm not sure who you talk to or who you know. I talk to a lot of people, and I can pretty much say I don't know anyone that has zero debts, like no debt at all. But assuming you make just over $44,000, have zero debts, and got a mortgage at 5.25%, which is right around what it is right now, you will be able to afford a home for $185,000. And that's assuming you have $10,000 to put toward the down payment. In the comment section, let me know where in the country or world you're watching this video at. Because right now, I am right on the border of North and South Carolina. And yes, there are some homes priced around $185,000. They do exist. but typically those homes were built in the 1950s to the 1970s. And typically those homes are anywhere from 1 to 2 bedrooms, and on average, they are less than 1,200 square feet. I told you, I talk to a lot of people all the time, and I talk to a lot of buyers. And even the single buyers do not want a 2 bedroom home. So if you have a family, or even if you're a single person, you don't see many people wanting a 2 bedroom home, nor do you see people wanting a home less than 1,200 square feet. So in the comment section, again, let me know what $185,000 can buy you in your area. For the past 2.5 years, I've been telling everyone and anyone that will listen to buy a home, because even though I saw the increased pricing, I saw that housing affordability were at record levels of affordability. The historically low interest rates allowed for monthly housing costs in relation to household income to be insanely low. Well, those days are over. According to the Housing Affordability Index, now I don't want to get too into the weeds regarding this index, but just know that the higher the number is, the more affordable the home is. And according to that index, housing affordability is at its lowest point presently since 2008. So no, I will not continue to encourage any and everyone to buy a home. Yes, I still firmly believe that home ownership is the path to financial stability and security, but you have to look at where you live and compare the cost of renting versus buying. And if buying causes you to be over leveraged, then I believe you have two viable options. The first option is you can move further out to a location where home prices make owning more financially prudent. Or the second option is you can choose to rent if that makes more financial sense. I don't want anybody to ever be house poor. Now, house poor is when you can afford your mortgage, you can afford your house payment, but you can't enjoy the other things in life because you don't have any disposable or discretionary income. I don't want that for anyone. Moving forward from this video, if you leave with only one thing, I want it to be this. If housing unaffordability continues to increase, be on the lookout for mortgage brokers coming to the market with creative loan types and adjustable rate mortgages. Now, it is my belief, just my belief, that first-time homebuyers and real estate newbies should not entertain ARMs or adjustable rate mortgages. For a small subsection of the population, ARMs are useful tools, but for the vast majority of people, including first-time homebuyers, adjustable rate mortgages should not be considered. In the past 2 months, the percentage of homes bought with adjustable rate mortgages has increased almost 90%. Now, that's not to scare you or to say there will be a housing crash because of all these adjustable rate mortgages, because ARMs still make up less than 4% of all mortgages right here in the United States. But I want you to be on the lookout for more lenders introducing these types of products as interest rates continue to rise. It is always an amazing time to buy a home. You see, it's not about timing the market, it is time in the market. You make money in real estate by holding on to it for a long, long period of time. But when you are looking to buy a home, you have to be honest and look at your own finances and make a wise decision for you and your family. I hope this was helpful. I'm Sir Ashley. Talk to you soon.